Good morning, everyone, and happy Friday. It is Julie here with your TipRanks pre-market morning update, where we're bringing you everything you need to know before the market opens. So let's get into it. All right, guys, welcome back. Thank you all so much for being here. We have made it to the end of another week, so TGI Friday. Now, as usual, this morning we'll be taking a look at exciting stock market news, notable earnings reports, including one that came early and with a big surprise, and which stocks are the morning's biggest gainers and losers. Don't forget that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's get right into this morning's exciting stock market news. We are ending the week off with U.S. stock futures in the red. Currently, the Dow futures are down 0.76%, S&P 500 futures down 0.84%, and NASDAQ futures down 1%. Shares of Uber are down slightly in the pre-market after investigating a cybersecurity incident. An Uber spokesperson said that a hacker had hacked into an Uber employee's workplace messaging app, Slack. The hacker sent out a message through Slack to other employees that the company had suffered a data breach. According to Reuters, the hacker was able to gain access to other internal data systems of Uber. Uber later tweeted, "We're in touch with law enforcement and will post additional updates here as they become available." Analysts currently rate the Uber stock a strong buy with an average upside of nearly 44%. Shares of Gap are down slightly as their partnership with Kanye West has come to an end. Kanye West is of the opinion that the fashion retailer has not adhered to the terms of their deal. They noted that Gap has not lived up to their contract of opening 5 dedicated retail stores, nor have they launched Yeezy Gap apparel as planned. As per their contract, they had promised to sell 40% of Yeezy Gap products in retail stores, but the retailer took time to launch these. Gap and Kanye had entered into a 10-year partnership in 2020, but it seems that will be ending much sooner than expected. The Gap stock is currently rated a hold with an average upside of 3.6%. And shares of NCR are down this morning as the company decided to end the process to sell itself and instead split into 2 companies. The executive chairman of their board said that they received material interest in a whole company sale of NCR as well as interest in various individual segments, and that in recent days it became clear that they could not deliver a whole company transaction that reflected an appropriate and acceptable value. They'll separate into 2 independent companies, one focused on digital commerce and the other on ATMs. Now moving over to notable earnings reports. Now, today was supposed to be very quiet for earnings with no big names reporting, but we did have a surprise from FedEx. Now, we weren't expecting to hear results from them until next week, but they came out with their results early with disappointing numbers and withdrawing their full year guidance. Their stock is down about 20% after reporting earnings per share of $3.44, well below the anticipated $5.10 per share, and sales of $23.2 billion, shy of the estimated $23.5 billion. They said that the company is going to close more than 90 FedEx offices, slow hiring, and consolidate some package sorting operations, among other things, to save money. All of that led to them withdrawing their guidance for the full year. Analysts currently rate the FedEx stock a moderate buy with an average upside of 35%, but we'll see how reiterated price targets continue to roll in. Now, we also heard from Steel Dynamics. They aren't actually reporting quarterly results until mid-October, but they did provide us with a better than expected profit forecast. Steel Dynamics said profitability in the current quarter from the company's steel operations is expected to be historically strong. They're now expecting adjusted earnings for their third quarter to be in the range of $5.33 to $5.37 per share, higher than the estimated $5.07. They said that they expect the historically strong order backlog to continue into 2023. Analysts currently rate the stock a hold with an average upside of 5.5%, but the most recent rating comes in a buy with an upside of nearly 26%. Now let's take a look at which stocks are this morning's biggest gainers and losers. Our biggest gainers this morning are led by AMTD Digital, who continues their very volatile ride this week based on no distinct news. The stock hit highs well over $330 yesterday before falling 28%. Trading under the ticker HKD, they're now up 11% in the pre-market. They're followed by Intellia Therapeutics under NTLA, up over 6%, and Acadia Healthcare under ACHC, up 5%. Our biggest losers are led by FedEx following their disappointing earnings. Trading under the ticker FDX, the stock is down just over 20% right now. They're followed by NCR under the ticker NCR, down nearly 18%, and Getty Images Holdings under GETY, down 13.6%. So that is going to be everything for Friday's pre-market morning update, getting you up to speed with what you need to know before that opening bell. If you made it to the end of today's video, make sure you hit that thumbs up button and say good morning in the comments down below. I always appreciate hearing from you guys. Thank you so much for watching. Have a fantastic weekend, and I'll see you back here on Monday.